markets are now moved into what's called a power trend, with this normal Tuesday video of Gary Glover's weekly report on the ASX and the top trading shares that he's adding into his portfolios. We're also using a quantitative perspective this time and having a look at what is a power trend and what does it normally mean for the markets. That's something to look at as we walk through these reports. But first off, we've got the portfolio to check in and say, good morning, Gary Glover. How are you?
Yeah, pretty good. Pretty good, actually. Yeah.
So the portfolio is performing reasonably well. You've got a fair few positions in the green. You've been heavily invested for some time and having to trade out positions because you've had so many opportunities, so working well. Any updates on the portfolio very generally, or is it just taking profits when they hit, filling the heat, moving up stops, all the standard?
Yeah, just all this sort of standard. There was sort of a couple of sort of gone further ups, had a couple of minor pullbacks there, so maybe a little tight on my stops there. But I just, still trying to stay fairly long here if I can. I still feel like market's going to churn high here. The power trend's quite interesting there. So it's you got so the low price is above the 21-day moving average for at least 10 days. The 21-day moving average of the 50 moving average for at least 5 days, and then the 50-day moving average is sort of in an uptrend or at least sort of turning positive, and then it sort of switches off when the 21-day moving average crosses the 50 days. So this all sort of sounds like mumbo jumbo, but what it basically sort of suggests here is that sometimes when a market comes out of the gate so hard and it shows real strength early, when it ticks a lot of those boxes there in terms of crossing those moving averages for a certain amount of time, because oftentimes you can get a quick bounce and then the market, will tend to fade. So it's like not a dead cat bounce, but a bear market rally sort of, so if you think this is a bear, some people out there still think it's a bit of a bear market rally here, jumping up here, but normally they'll fade pretty quickly and they'll cut back below the averages there. But when you see that bounce with gusto and then you see it hold and not show the weakness, it holds above the moving averages for, a reasonable period of time here, then oftentimes this is the start of a bigger move. So some of these, what they call these power trends there, in the past, it's funny, I was actually looking, I think I mentioned, I looked up the power, because I knew sort of Mike Webster, IVD, were looking at the power trend. It sort of was getting pretty close in the last week. So I think it triggered on Thursday night. But I was trying to go back and look at stats there, and I actually found a tweet from a year ago, the last power trend. And I had all the stats on there as well. So I think, but generally what it meant is it's sort of like, they typically sort of tended to sort of keep moving there. So I think that like the minimum length after the, I think maybe the last sort of 15 power trends there was about 7 days, and sometimes they can last up 300 days. But on average, I think it was about 74 days that the power trend, once the power trend was triggered, that it continued on. So on average here, when we get a trio like this, that shows us real strength, we tend to sort of rally for another 2 or 3 months, at least there. So, it's just an interesting sort of statistical analysis there, I guess, on the market there. But basically what it's sort of showing here is when a market bounces this strong and holds this long, it tends to sort of continue on for at least a few more months. So, and then look, it fits into the cycle there. We know that, we talked about April through to August is pretty much the sweet spot for this year. That's really the time to sort of be long, have the foot down there. I know sort of IBD, I know Mike Webster, he'll often look at the 21-day moving averages as he likes to be above that generally, but the power trend is basically it's a signal to put the foot down for momentum traders there. So it's just a really interesting technical study. And so look, there's no guarantees here. Obviously they can pull back. I did notice that the one thing when I looked at the last 3 or 4 Chris power trends was there was a little bit of a pullback when sort of just after the power trend triggered. So just to try and shake out the week. So they had a little pullback, but then it continued it. But it was more of a grind, So oftentimes you find that when you get the really fast move, we've seen it a few times in the past there, I think one of the charts that I showed there had it on there where you get that really fast move early and then it just sort of grinds sort of higher on its side there. Might be the Dow or the S&P there, I think.
Well, you've got the Nasdaq on there, and that's sort of conforming with the blueprint that you've mapped out and what you've just updated us with. There's the S&P, and then we'll have a look at the Dow. So, which one's sort of talking to you about the current what you're talking about there?
Yes, yeah, that one there. Yeah. So see how we came out of the October 23 low really hard. Yeah. So really aggressive. So again, it's sort of like you get that aggressive move there early out of these sort of deep lows, and then you can sort of get into that sort of sidewaysy grind there. Well, not sidewaysy, but upward.
Slow up.
Yeah. So I mean, you do. It's sort of like it sounds funny. Your first third will sort of cover the 2/3, and then the last third will take 2/3 of the time. Goes well. It's a bit like options and call writing time value if you understand those principles. So, so we just kind of get that big jolt there early, and then the last third's a bit more of a grind there. But it is still pretty positive there overall. So, I just don't see any negativity so far. And there's still a lot of doubters as well here, which is really awesome. So you want to sort of see we've got underweight here on their sell-off. It's bounced so far they're trying to play catch up. Yeah, that's one of the reasons why when they do come out of the gate so hard like this, people get left behind, and then they're forced to participate in any pullbacks. And what that means is because a lot of people are holding cash to deploy that, they're going to try and any weakness they're going to try and deploy it. So just means that the stocks don't really end up coming back that far. So you might only get like 2 or 3 day pullbacks in the market, and then we're up again, and then 2 or 3 day pullback, and then we're up again. So that's the type of sort of grinding situation you normally sort of see there.
That does fit in with the grind towards August. So hopefully that does kick in, and we've got a couple of months of the power trend sort of being the backstop behind the market, pushing it higher with just that steady accumulation with any dips, buying the dips that come in. We know that the statistics are slightly different for the Aussie, obviously different market, different currency.
I was going to say, Chris, that S&P 500 chart that I posted there, I looked at a longer term chart here. I thought this is quite interesting here longer term, because it really sort of shows that if you look at that chart there, each sort of pullback in the market there has sort of sat on top of the previous high, and then it almost left a little bit of spacing there at scan as well. And then so the next pullback sat on top of the previous high, left a little bit of spacing, and then just recently we pulled back, left a little bit of spacing just above that previous high as well. So from a trend point of view, like it's like building, it's like a staircase. You sort of build on top of each other there. So each of those pullbacks have just sat just above the previous sort of highs there, and then built again. So the good news is there, as that staircase builds, it means that normally it allows you to go to the next new high. So when I squared those previous ranges out there for the S&P and the Dow, how they've done 100% of the previous ranges there, I thought that was a really key level technically. And we've got obviously big pullbacks on those levels, but I was concerned that might keep a lid on the market for, I remember talking about at least sort of 6 months before we pass through it. But that's that trend structure there that shows you that the last pullback is just sat on top of the previous high. So in a normal trend structure, that's just really normal behavior in an up.
When you say normal trend structure, so if you saw this in a stock, doesn't have to be an indice, but an individual company, you'd be happy with it.
Yeah, that's right. So we just pull back, sat on top of the previous high, that leaves it in a strong position to go to a new high. So as each sort of step there just builds on top there. So this is what we call like a normal bullish trend, just sitting on top of the previous high there is really sort of constructive. So what it indicates is that probably 85% of the time you're going to go to a new high when you're still on top of the previous high. It's just that's just the way you're sort of building in a really constructive manner. So actually gives me a lot more confidence seeing that sort of structure, thinking, okay, that high is a pretty significant level, but now I think it can actually go through that level. But actually, so maybe we run up into August there, pull back into October, then maybe we push onto a new high into the end of the year. and we're at new highs, sort of either in the back end of this year or early 26 before we sort of have any hiccups. So I think it's kind of pretty constructive overall.
Well, that's positive to hear that the power trend's sort of working towards us going to decent movement for the next few months. The blueprint, the presidential cycle, 5-year, the 10-year, the 60-year, all sort of indicating towards a couple of months of positive. And then just the technical analysis itself for the S&P 500 is sort of indicating to that. So that gives us a nice few tailwinds, confluence of many different factors leading us into it. But then we do have to question the Aussie. Obviously, we get dragged along with the global market economy in that sense. Is there anything different on the Aussie, or it's kind of we can play to that same tune as well?
Yeah, playing to the same tune. If anything, we've probably shown more strength. So coming out of that low, we've come out with even more gusto than the other markets. And I think we've seen in the last sort of 2 or 3 weeks, Chris, we've seen some of the materials commodities starting to liven up there. Probably some of the commodities that were underperforming there. So definitely seen a nice jolt throughout the energy sector, and we've seen nice jolt through some of the other, even some of the lithium names have sort of got off the canvas here. There's been some nice rallies in there. Copper, just some of the other metals, we're starting to sort of see some movement there. So that's a pretty heavy part of our makeup in the market is obviously materials. And although gold's obviously had a great probably 18 months there, gold and silver's probably been kind of on its own in some regards. So if the other material sector were to get some strength there, that really could drive us a bit higher there. So that's so seeing some pretty good signs. I mean, look at the volume in the last 3 weeks there, Chris, as well. That's pretty robust. So yeah, we're sort of maybe we're high and stuff there, but that's not showing weakness. That's showing sort of signs of strength here. So big sort of wide range, good volume at the low, good exhaustive low, and then we've had some good volume there. But the last 3 weeks are still saying very robust there. So I think actually, if anything, probably our market's probably looking even stronger than some of the others.
Nice. Well, we'd love to see that transpire. If we move into the next layer down into the markets, you've talked about different segments. You've talked about sort of materials, hopefully being able to pick up some slack and drive the market higher if they participate with the industrials. GrainCorp's one that you've talked about a few times before in the context of an inflationary environment and seeing it move in that sideways channel. What's most interesting in this week's report is you've talked about the false break, well, for years, but particularly in the last couple of weeks. So undercutting this low that we saw in the first part of 2023, we've done that more recently. How critical is that for you to see that in a chart in the context of what we're seeing now?
Yeah, so obviously we just talked about hard commodities there, so obviously looking more buoyant there, but the soft commodities as well, like there's been definitely some pretty hot patches in there. So if we look at, coffee prices, there's been a few of the soft commodities that have been, had some breakouts there. You've got a few issues there with, on the egg front, and obviously now chicken virus as well. So just sort of some of those sort of agricultural sort of forces there could be positive as well. So I just noticed GrainCorp, again, this came back down, retested that low, made a false break, and then took a little while to sort of build here, but then had the pop there last week, and it's a pretty good update there. So it's just kind of bodes well for that ag sector in general. So we did sort of buy a little parcel off that false break, but it has popped there. So it's probably sort of consolidate a bit there, but that's pretty buoyant. That's pretty positive there. So I think it's a good sign here. I mean, we've talked about this sort of setup for the last 18 months, Chris, as sort of, when inflation has been higher than normal, we have seen range bound markets there where we sort of see false breaks and marginal new lows, marginal new highs there. So we saw it BHP there recently as well, and just a few other stocks have come back to retest the highs and because they've got the marginal new highs and then marginal new lows. So we're seeing these big wide ranges there swing back and forth there. So, there's some good trading opportunities there if you see those sort of setups there. So, I think, GrainCorp still looks pretty positive to me. Might need to consolidate this little, this jump there, but if I saw some sort of little tight consolidation there, might be worth, might even add to our existing posse.
Well, it's nice to see GrainCorp on the list. CSL, different part of the market. This one hasn't bounced. So we saw Macquarie and a few of the other large caps that got hit quite hard into the April low, recover quite quickly. Combank exceptionally coming up to record highs just this week. What's happening?
Same sort of setup as GrainCorp there, Chris, as well. So yeah, I mean, we although GrainCorp has probably only sort of had that, retest the low, didn't go to a new high, but it has retested the low, like, literally sort of 12 to 18 months later. So a similar setup here for the CSL as well. So again, this is a big sideways orientated market. Love to see it go to a new low and then fail. I think it only went about 4 cents lower. So again, there's margin on your low. So it's marginal means only just a few cents lower and then reverse. So starting to see that build here again. So it's just something we see quite a bit of. We've seen quite a lot of it here in recent years. So, the beauty of this setup is that if you do see a false break there, it recovers there, then you're sort of trying to look for maybe the first high low or some sort of safer entry. But the beauty is here, if you're wrong, you're only risking a sort of small amount. And if you're right, potentially it could go pretty deep up in the range. So we've seen a big pop in GrainCorp, but yeah, this potentially could pop all the way back up to 300 or maybe even further here. So from a risk reward perspective there, these are interesting setups there just because there's such, we're seeing those movements and those ranges have been quite large. I mean, look at look how fast in 23 we found the low, and then look how fast it came out of it. That's the beauty of those sort of false breaks and stuff there. They can be fast moving, V-shaped recoveries here. So, that's why, we've added some CSL there. It's one that I still probably, potentially might even add to as well.
Nice. Well, the next one in your list is Cleanaway Waste Management. We have looked at this one before. It has recovered from those October 23 lows around higher. So this is obviously the weekly chart. And then it's been in that range to then sort of flatten out with sort of higher volume on average to then break out to the upside. So what's happening here?
Yeah, it just looks pretty positive there. So just, it's can be a little choppy just one neck. Does sort of move, back and forth pretty, probably a bit wider range than some other sort of stocks there. But yeah, overall looks pretty positive there. So we have added a parcel there. If we see any sort of tightening or consolidation there, we may even add to it as well. So I think it's another one that looks pretty positive.
Now, a great success story in the international market's been AI and a lot of the data chip companies associated with it. In Australia, we don't have much of that industry, but we do have the real estate and we do have data centers where they can do the processing, and we are on the other side of the world. We have reliable power and fairly good infrastructure. So that can be a positive and a way to play it. DGT, how does that fit into it? And what's the chart caught your eye? Which part of it?
Yeah, so it's sort of like a new IPO, Digico Infrastr REIT. So unusual to see a REIT go from 5 to 250 in, the first few months of sort of IPOing. So it's a fairly, so, but we did see quite a big retracement in a lot of the data centers here. So next DC, I think, HMC. So just quite a few of even Guzman's had a pretty decent sized pullback there. So we're just seeing it, I think there's sort of Microsoft comments about maybe not requiring as many data centers as first indicated. I think spooked the market there, and it's seen pretty strong sell off there. And yeah, look, some of those data centers had some pretty big valuations at the recent top there, but you still got to look at there's not many sectors, Chris, that are probably going to triple or quadruple their growth here in the next 3 or 4 years. So that's still going to sort of stand out as having some pretty strong growth moving forward. So yeah, hard to value and not making money in some of those data centers at this stage. But when you've got that sort of growth there, it's still got to open your eyes to that as well. And so that's the market will tend to sort of follow those stocks there. So I just noticed out of this low here, we've seen a pretty impulsive bounce from XDC and from some of the others that I think Guzman's as well, and DGC has had a pretty nice bounce as well. So we're just seeing some pretty good movement here out of these lows there. So just think this is pretty constructive there. If we sort of see a bit of a consolidation there, hopefully maybe sort of consolidate back to that old high there, that would be a great level to maybe look to add to a position there. So I did buy positions sort of off this first higher low here, just because I thought, some of these data centers were, well, XDC sort of came out harder, and I think the rest of them sort of followed as well. So, so it's just one that I think potentially can come back there. We do know that from a mental perspective there, a lot of the strongest performers there do come from the newer names, so like IPOs and stuff there. So this is a sort of newer name that's sort of been sold off. And they do come on pretty hot early sometimes and then fade, and then you get a chance to come in there. So, so I really like the sort of setup here so far. So look, I just think it looks pretty good. So just unusual to see a REIT come off this hard, this early. So it could be an opportunity there. And, so I do like to look at this longer term.
Well, looking at IPOs in the last couple of years, the most popular one that got a lot of press was GYG. It did perform exceptionally well. It had sort of a different start to GGT. It started really hot and got a huge amount of demand, huge amount of hype. Share price soared until it didn't. So can you describe after it didn't and it fell off a cliff, what's happening here and why is that important?
Yeah, it's funny. And obviously, stocks like this are sort of few and far between here for the Aussie market there. I think, the Domino's obviously sort of came to market and it had a pretty buoyant run. And I remember actually I did take stock in Domino's. I was working for Morgan's at the time, so we actually had access to the IPO. It might have been from 5 to 8 there or something in the early days. But everyone spoke about how expensive it was the whole time from the get-go, from the start. And we've seen it, with, Chipotle in the US as well as another sort of model stock there. Whereas again, they've come on pretty hot early, and again, everyone talks about how expensive they are. But stocks that really, stocks that do have that sort of growth there where they can be rolled out. They often sort of do have much bigger rallies than most people anticipate. So it's just, See, I either find that you get a Digico there where they maybe come on hot, and then they fade, and then they start to build, or they can actually have a hot run and then cool right off again and then go again. So there's a couple of sort of different IPO sort of potential setups just to keep an eye on there. So this one got a little bit hot up to $46 there, has cooled right off here, come all the way back to, $29 there. So it's a fair correction there. And I just like the fact that it's now the price action is starting to sort of tighten up here. Just quite like the volume profile there. Got a bit of a VCP sort of setting up there, Chris. But we've definitely seen some better volume signs there on the up weeks and sort of lighter on the down there. So if it was to sort of pop out of the range there, maybe make a little B-wave break here, it could be one to follow here. So, these stocks, some of these, these leading sort of stocks here, they always look expensive. So, it's just sort of part and parcel of it. So, look, you got to be careful. Those stocks, they have their, have their cycles there, but they often can have some pretty big moves as well, which are much larger than most people anticipate.
And I remember you talking about Domino's. I remember trading it for momentum, and I had one client say to me, "Oh, it's $6. I think it was $6.80." He said, "Oh, I can't sell that many more pieces. I'm not going to buy that. I can't sell anymore." But one that did surprise us last time around was CU6. You talk about these leaders and they run up dramatically. I'm going to take the opportunity here to actually just throw the 80-20 in there as well. And then sort of question, okay, well, after that 80-20, do you just want to explain that for a second?
Yes, I mean, look, it has, I guess the 80-20 rule is that, also the 80-50. So I guess from a momentum point of view, sort of.
Oh, yeah.
Yeah. So the
58, yes, 58.
80% of those.
It's not even a different thing.
So like 80% of those momentum stocks sort of have a 50% cool off when they're done. And then you can get sort of like 50% of them will have something deeper, around that sort of 70 to 80% sort of correction there. So you often sort of see them, even things like Coca-Cola, McDonald's and stuff there, they had like 70, 80% average on as well. They've had a couple of them along the way. So you always sort of see them occur here, even the strongest names here. So this one here is look, it's had a pretty big drop here. So that is probably, that's probably definitely an 85% sort of correction there in terms of price there. So pretty deep here. You find that you probably want to sort of stick to normally the 50% pullbacks rather than the 80-90% pullbacks. So because there's sort of so many losers in front, it does make it hard to sort of to recover there. So I think Afterpay might have had one or two 50% pullbacks along the way, and still recover, went to new highs there. Whereas I think bigger ones there that probably don't get back to the highs there. So that's the sort of negative there. But the one thing sort of standing out to me here, Chris, is probably the last 2 months is the big volume there. So it's been really heavy selling there. So look, it has come back pretty deep, but does look like potential sort of accumulation sort of style volume for the last 2 months. So heavy volumes here taking place at the lows here. So like I know instead of trading at $8-9, it's trading at $1, so you can trade a lot more of them. But the volumes are still sort of pretty heavy here, and it has had a pretty steady, strong volume rally coming out of the lows there. So just want to sort of keep an eye on here. So normally I probably don't like to sort of see a stock that's come off this much, because it hasn't really shown that relative strength that you want to see. You want to sort of see the stocks that hold up better and have these deep corrections there. So, but the volume is sort of striking. So it is sort of telling me just keep an eye on this one here. I think if it's one that sort of maybe can go through a little bit of a consolidation phase, and then maybe starts to break out there. Like maybe it's a bit of a laggard there. Maybe it'll be, it'll set up later than others. But yeah, it's just interesting that volume is quite eye catching to me. But I'll be curious to sort of see what happens on a consolidation. If we can see the stock goes sideways for a bit, not lose too much price action, and the volume dries up a little bit, that'll be sort of a bit more constructive there. So it's not my best pick here, but definitely that volume is just telling us to keep an eye on this one here as a potential stock there. And then, we've seen a few of them there. I mean, you just got to remember that something like this, it's very doubtful whether it's going to go back and retest the high, but this sort of stock here that's bounced from 150 back to 250, it could sort of, that 150, so it could bounce here another $1 again, so it could go to sort of $3 or $4 pretty quickly. Just probably will face a headwind of sellers as well. So still a trading opportunity there, just not the red hot one that we'd like, but I'd say that the volume is kind of striking there. It's just telling me to sort of really watch that carefully there, because it does look like solid signs of accumulation down here.
That's a great insight for the week. And for those who want to brush up on Gary's 2025 forecast to see how this rolls out with the blueprint that he put, we're going to put that on screen and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.